and welcome to Morning Trade with Moneycontrol. I'm Karunya Rao and I'm here to help you navigate today's trading session with actionable strategies, sectoral trends and most importantly, your queries during the show. So please keep your comments coming on our live feed. We'll have it addressed towards the latter part of the show. But before we kickstart, let's see what the global handover looks like. Recession fears and concerns over rising rates and high inflation see Wall Street continue its losing streak in the first trading session of the new year. EV giant Tesla leads the sell-off on Wall Street while Apple hits a 52-week low. As far as Street is concerned, all eyes now on December Fed minutes, which will be released later today. Stocks in Asia Pacific open mixed, the SGX Nifty signaling a lower start for the Indian market. Stocks in the spotlight today are D-Mart, Vedanta, RailTel, PNC Infratech and NTPC. We also get you a lowdown of what's buzzing in the commodity markets. All right, before talking technicals with our guest, let's get going on our conversation on commodities with Manisha Gupta. Good morning, Manisha. We've seen a fall overnight in crude oil prices. Can you tell us what's going on in the oil markets?
Morning, Karunya. Well, yes, the first full trading day of 2023 and the energy pack has come tumbling down. Take a look at the crude oil prices. We were trading at a one-month highs, but we are 4% down overnight and clearly off those one-month highs there. So from nearly $86.50 of a high, we're just about holding around $82 now for the Brent prices. And not just the crude oil prices, you have heating oil prices which fell 5%. Natural gas prices declined for a second straight day and 10% overnight this time around. Three factors to watch for. One is the China PMI data, which contracted for a fifth straight month for the month of December and now has declined to 49. Second was the IMF warning for 2023 as a tough year for growth in China, European Union and US. And then China also raised export quota for refined oil products. That tells you that the weak domestic demand is leading to China to export more of its petroleum products. All of that was bearish for the prices. And then the markets clearly will watch out for the cues from Russia and OPEC and allies and what they do for supplies. So supply part is one thing to watch out for, but demand is a big question mark right now, and that is leading to decline in prices.
What about natural gas prices? They've also fallen about 10% overnight. After the run-up that we've seen, or most part of last year in natural gas oil prices, do you think right now one should tread with caution here, or is it a temporary reaction to news flow?
Oh, with the kind of decline that we have seen, Karunya, it does look slightly damaging on the charts right now. And the fact that you are looking at warmer than expected temperatures in US and Europe, that means that the demand is not coming back in a jiffy. So first 2 weeks of January are expected to be milder weather. You know, Karunya, I was looking at some US cities' temperatures, and Mumbai perhaps is just 5 or 6 degrees more than that. So clearly it's a very warm January that you are looking at, the beginning of that for many of these US, Canada, European Union countries, and that is weighing on the gas prices. The second is that you are looking at record LNG imports from Europe. It is higher than normal stockpiles. There is increased power generation from wind, and the gas storage in Germany is at 90% of capacity. Usually it's just about 70%. So we are looking at ample inventories right now. And for the next couple of weeks, there is no reason that you could be looking at the gas prices really running up from here.
Okay, all right. How about the macro indicators right now? We've seen China's PMI data contract. IMF has warned for a tough year for US, EU, China. And of course, we know about the ongoing conflict between Ukraine and Russia, which still has no resolution in sight. Talk to us about how things could pan out, especially for the oil markets, at least in the foreseeable future. What kind of a level should one watch out for on the downside as well as on the upside?
Oh, well, absolutely. You basically listed out all the reasons there. Just let me add about the weak demand outlook amid the growing U.S. recession fears and, of course, the COVID-related uncertainties in China. In the last 24 hours, we've seen statements come in from the former New York Fed president saying that the U.S. recession is on cards, but will not likely be severe. And while Alan Greenspan said that recession is the most likely outcome of the world's largest economy, so these are the statements that are weighing onto the sentiment right now. And then the surging COVID cases and a rising death toll in China is also hurting the near-term demand outlook for that country there. while the country is reopening, but the demand is not picking up, and that continues to weigh into the markets there. So this is weighing. For the crude oil prices now, the expectation is that by the second quarter end, we will be back at around $100 a barrel because the demand will start coming back into the market. And we will understand in the first couple of quarters on how the recession fears also are panning out. For the very near term, some more pressure could be on cards. But by the second quarter end, we are back in 3 digits yet again.
And ahead of, the FOMC meeting minutes that are likely to be released later today, any other commodity that one should keep on their radar which could see some wild moves?
So today has been a day when you have seen decline across. Energy is not the only area where there are declines coming in. It's pretty much the same case for the industrial metals. Coal, which gained by nearly 140% in 2022, has opened with a decline in 2023. Copper, aluminum, iron ore all have seen a decline come in here. While it is about the U.S. Fed meeting minutes today, it also is about the U.S. non-farm payroll data that comes in on Friday. So ahead of that, markets are going to be choppy. So within this market, the only thing that continues to hold firm on its feet is gold and silver prices. No shakeouts there, even with the strength in U.S. dollar index. This is one sector that seems to be keeping its head above the clouds.
Okay, well, good news then coming in for investors of precious metals. Thank you so much, Manisha, joining in with an update on what's happening in commodities, especially oil markets as well as gas prices. Okay, let's talk markets now. Shrikant Chauhan joins us from Kotak Securities. Morning, Shrikant. The trade setup is not looking very encouraging, but that hasn't stopped us in the past, right? Last couple of days, we've seen weak or muted global cues and we've still managed to buck the trend. But now that US markets have also opened and on a rather negative note, talk to us about how our own markets could react today.
Yeah. Good morning, Karunya. Good morning, everyone. I think, the markets are clearly following to the global markets while opening. But during the day, again, the data based on options, that actually decides the overall trend of the market. Yesterday also, when there was deep in the market, we saw some quick sell-off in the market. But around 18,150 and 18,100, where there is huge amount of put writing is there. From there, we saw recovery. However, the market failed to cross the level of 18,250 or 300, where there is huge amount of call writing. So global markets are deciding to the opening of the markets. But during the day, we are seeing option-based activity. I think from the next week onward, we are going to see the real trend of the market because from the next week onward, the result season will start. And most of the time, whenever the result starts, our market starts following to the domestic close. So I think in this week, we are going to see further more volatility within the broader trading range. But yes, in case if we see the markets are crossing the levels of 18,270, then certainly we can expect upward activity towards the levels of 18,350, where there is huge amount of resistance. So 18,270 is the level, and the strategy should be to look for adding position if there is any correction during the day, close to 18,100. Or if there is any bounce back, then we should look for taking some profit on long position, or we should look for reducing some positions.
Okay. And ahead of earnings season, which is going to kickstart next week, we've already seen a lot of companies deliver their Q3 business update. Case in point being Avenue Supermarts, D-Mart. They've reported a 25% year-on-year growth in their revenues at 11,300 crores. Total number of stores as of December 22 stand at 306. Now let's talk about D-Mart and the technicals of it. What are the indications that you're getting?
Yeah, see, for D-Mart, technically, if we see the chart of last few days, then it is in the range. It is not crossing the level of 4,200, but at the same time, it is finding good amount of support close to 3,900. I think it is going to spend some more time within this range because the stock is finding a lot of resistance at higher levels. And on the downside, 3,900 acted as very good support since last so many months. So if we see any drop in the market or maybe in the stock because of any reason, then we should look for adding D-Mart close to 3,900 levels. And we can expect some trending activity above 4,300. So for the time being, I think we need to be a contra trader if there is any specific decline or rise in the stock.
Okay, that's an interesting way to look at D-Mart. Talking about Q3 updates, I want to also flag off Vedanta. Alumina production for Lanjigarh refinery has fallen 6% YOY, largely because of maintenance activities at their calciners. The total saleable steel production, meanwhile, is down 13% YOY, again largely because of maintenance-related activities during Q3. Zinc global production, however, is up 32%. Now, if we talk about the stock move of Vedanta, again, decent upside seen last couple of sessions. Can the momentum sustain?
I think it looks like, because the stock is forming ascending triangle on daily charts. In fact, since last 6 months, 7 months, the stock is finding huge amount of resistance close to 320, 325 levels. So if we consider the overall technical pattern of the stock and the overall businesses which are there in the company, it's a diversified company. So certainly it is going to get benefit out of that, because now again we are seeing uptick in the all commodities. And whenever there is like a start of the rally in all the commodities, we see a huge amount of activity in Vedanta. So we are of the view that it is heading for the levels of at least 355, 360. And in the best case scenario, we may even see the levels of 380. It is completely based on charts, because the stock is like still showing a lot of strength. So it's a buy, certainly at current levels, more on dips. I think we should look for adding the stock on every dip, but we can keep stop loss at 300 for holding any trading long positions.
Okay, all right. Moving on then to the next stock, which is RailTel Corporation. They've received work order worth 186 crores from Southeastern Coalfields. Now they will be providing MPLS VPN services at 529 locations under SECL command area for the next 5 years. RailTel, again, one of those big PSU star performers of 2022, especially the latter 6 months have been rather upbeat for the stock. What are the prospects from these levels now? Where do you see it heading?
I think seeing in RailTel also we saw a smart rally from the levels of 90 to almost 150 without any meaningful correction. But in last 2 months, the stock was like correcting from the highs, and I think after hitting the levels of close to 110, 15, stock has completed its correction. So after completing the correction, most of the time again stock enters into trending move, and based on that, we are expecting stock to move towards the levels of 160 or 170 in next maybe few weeks or months. So it will take time, but certainly it's a buy, because the stock is still into that primary uptrend, and correction has already done. So it's a buy at current levels around 118 to 120, 130, 125. We can keep stop loss at 110 for holding any trading long positions, and the positional target is somewhere close to 160, 170.
Okay. We're getting some comments from our viewers on NTPC. In fact, that was the next stock on my list as well. The company has commissioned India's first green hydrogen blending operations in the PNG network. The network is based in Kawas Township in Surat, and the project is a joint effort of NTPC and Gujarat Gas. Now, NTPC again, good run-up seen, but we've seen the stock in the recent couple of weeks cool off from its 52-week high. Now, does 160, 170 level, does it provide a good entry point, or do you expect or do you think one should buy at lower levels?
I think it is better if we buy the stock on the lower levels, because the stock is still into that corrective mode. It has not completed the correction completely, because the 200 DMA was around 150, 160 sort of levels, and the stock recovered from the levels of 165, 162. So if there is any decline or correction in the market, then the stock may fall to the levels of 200 days simple moving average. So there we are expecting stock will complete its correction. So at these levels, I think if there is any positive news flow, then we should look for taking some profit close to 175, 178.
Okay, all right. Moving on to the final stock on my list, PNC Infratech, another stock in news. Subsidiary Ackle Highways, they've received appointed date for a HAM project from National Highways Authority. They will be constructing a 6-lane highway on hybrid annuity mode. The construction period for this road project is 912 days from appointed date. Now let's talk about PNC Infratech. They have been, getting some interesting order inflow last couple of weeks. What kind of a momentum do you foresee on the chart?
Yeah, Karunya. I think, see, all these infra companies are really doing well on charts, even on fundamentals. They are uh, getting the orders. Also, if we go through with their technical patterns, then they are forming some rounding bottom sort of formation, which is clearly indicating us that they are going to deliver decent returns on the investments in next maybe few weeks or months. Such type of patterns we saw in PSU banks a few months back, and later on we saw rally. So similar sort of pattern we are seeing in almost all the construction and infra companies. In that, PNC is also looking good. It is above almost all the important averages like 20, 50, and 200 days. Based on the formation, I think it is heading for the levels of at least 370, 380 in next few weeks or months. So it's a positional buy, but certainly it's a buy even at current levels. We also like IRB Infra, which is somewhere close to 310, 315, and there also we are expecting stock to move towards 350.
Okay, all right. Let's move right on and address some of our viewers' comments, queries, and questions as well. The first one I want to flag off is from the insurance pack. Now, Raghumanda is asking us about LIC. We also had a question coming in from Trilok on HDFC Life. Now, yesterday we saw a good run-up in insurance sector stocks. HDFC Life, of course, was the top gainer on the Nifty 50 index. We had that upgrade coming from Kotak on LIC with a buy target.
Correct.
Not an upgrade, an initiation, sorry, my bad. Initiation on LIC with the target of 1,000 rupees. Let's talk about what's happening with insurance sector stocks because they have been quiet for a very, very long time. Is it now a sort of temporary blip that we're witnessing, or it could be a meaningful comeback for both LIC as well as HDFC Life?
Yeah, I think most of us are expecting market to remain in a range, and because of that, now the focus is again moving towards those companies or sectors which are defensive and which are going to deliver decent returns or maybe stable returns for next couple of quarters. So in that insurance sector looks much more promising, and we initiated buy call on the on LIC with a target of 1,000 rupees based on fundamentals. We are of the view that, and technically also, if we go through with the chart of LIC, then it was around some 900, 950 levels. From there, all the way it has fallen to the levels of 550, 600. So now it is like retracing to the entire sell-off. And if we see the technical pattern, then I think it is heading for the levels of at least 840, 850 in next few weeks or months. So it will take time, but certainly it's a very strong candidate to buy and hold. I think because of this particular specific buying interest from investors or maybe from the funds, all the stocks are going to do well. But in that, after LIC, we like SBI Life, which is somewhere close to 612, 1250, 1260 sort of levels. And 1270 levels, and there we are expecting stock to move towards 1600 based on fundamentals. Based on technicals, I think 1440, 1450 seems achievable. And for HDFC Life, I think that merger hangover is there, and because of that, the stock was finding difficulties. But broadly, we are bullish on almost all the stocks from the insurance sectors.
Okay. All right. Interesting to note that people are turning positive once again on insurance sector stocks after calling it in a void for many, many months now. So a fresh change coming there. Okay, moving on from insurance to banking, we have a question from Saurabh who wants your advice on RBL Bank. Now, RBL has seen a phenomenal rebound from its June lows, more than doubling from those levels. And even the last 1 month, a couple of weeks have been fairly resilient. The stock has been steadily gaining. Do you expect some kind of a break coming to this up move, or is it going to be a sustained, smooth trajectory?
I think the stock is under re-rating, and because of that, the stock is going up. It was around 100 levels in the month of August, September. From there, all the way now touching the levels of 180, 190. So when looking at the entire pattern and volume-based activity, I think it is forming V-shaped recovery pattern, which clearly shows that there is like huge amount of buying from experts or investors, and based on that, the stock will complete its target somewhere close to 200 or 220. So even at these levels, certainly it's a hold. If there is any correction, we should be buyer because the rally is significant. And eventually, I think somewhere close to 220, we should look for taking some profit.
Okay. Several questions lined up for you from Tata Group of companies. I want to bring up Tata Motors first. Suryakanta is asking us about this stock. Now, of course, we've seen a fabulous rally coming by on many auto counters last year. But off late, they have been pretty muted, and some of them have actually given up, a share of their gains. Tata Motors also being one of them, 8-9% downside seen last 1 month, and it has been, languishing pretty much in the red of late. Talk to us about whether it's a matter of concern, or do you expect a smooth sailing going forward?
Yeah, I think, the Tata Motors is under pressure is mainly because of it's a global facing stock, and because of that, we are seeing selling in the stock whenever there is weakness in the world markets. And this time also, when there is like recessionary sort of talk in the market from the developed markets, I think this stock is going to remain in a range. But 373 at 80 acted as very good support for the stock since last almost 7-8 months. And this time also, after hitting the levels of 380, now again it is rebounding back. So I think it is going to spend time between the range of 380, 370 on the downside, 440, 450 on the high side. So in case if we see any rebound close to those levels, 450, 440, we should look for taking some profit. But if there is a medium to long term view, I mean to say if there is a view of more than 6 months to 12 months, then we should be buyer in Tata Motors even at current levels and more on dips.
Okay, all right. What about TCS? Dinesh is asking us if there's a breakout on the cards. Of course, we'll be seeing the earnings also being delivered in the coming few days. If there is indeed any surprise in the earnings or in the commentary, could this see a sort of breakout on the upside?
Yeah, if surprise comes, then definitely we are going to see upside in the stock, because now there is expectation that all these IT companies are going to disappoint, and in terms of their quarterly numbers, Q3 numbers, and that's the reason all these IT companies were under pressure. Yesterday we saw some short covering because of the rally in the almost all the IT companies. Most of them recovered and surpassed their last 7-8 days, 10 days highest levels. In fact, TCS has broken the level of 200 days simple moving average, which was around some 3,300. So if there is any surprise, then certainly we are going to see upward activity. Otherwise, I think we should be trader in the stock with a tight stop loss. The stock is in the range between 3,400 and 3,150 on the downside.
Okay. And the final Tata stock I want you to address is Tata Consumer. Manish is asking us about this particular counter, especially given that rural recovery is something that a lot of media and a lot of analysts have been also talking about. So let's understand what lies ahead for Tata Consumer, because like many of its peers from the FMCG pack, this one has also been pretty quiet.
Yeah, in fact, since last almost 1 year, the stock is in the range. It is not crossing the level of 850, 880. It is not falling below the levels of 700. But the base part is that the company is strengthening its all the portfolio. So we are of the view that it is going to spend some more time in the range, but eventually we are going to see a smart rally in the stock. For the demand to come from the rural side, it looks difficult in the short term. But if there is a medium to long term view, then certainly it's a buy on dips. Currently it is around 767, 770 levels, but around these levels or somewhere close to 750, certainly it's a buy. At higher levels, I think 850 is going to act as a resistance.
Okay, all right. Changing gears away from Tata stocks then, Amog is asking you about Welspun Enterprises. Now, this one has also seen a single-handed up move last 5-6 months if we look at the stock pattern. Yes, there have been minor dips and blips, but overall, it has been a rather strong last couple of months for this one. Where do you think it's headed from these levels now?
I think the stock is under selling pressure, and it is not finding a lot of difficulties to cross the level of 85, 86. So I think it is going to spend some more time within the range, and unless and until the stock is not crossing 85, the level of 85 confidently, we are going to see range bound activity. So it is better to stay away from taking any position at all.
Okay, so Welspun Enterprises is not looking too encouraging at these levels then. Moving on to HOEC, Praveen is asking us for a view on the technicals of HOEC. Again, a lackluster mover, I would say, last 1 month, but at 139, 140 rupees, do you recommend someone to enter?
For Hindustan Oil Exploration, technically, certainly it's a buy because based on technicals, I think it has completed its correction around 125, 130 levels. After hitting the levels of 130, now it is forming double bottom sort of formation, which it will validate to it if it crosses the level of 160. So we are of the view that it's a buy if there is a again positional view. And based on technicals, we should look for keeping stop loss somewhere close to 125. So it's a buy, but with a positional view.
Okay. Sana is asking us for your view on Dr. Reddy's. Now, again, a very, very sluggish, very flattish move seen, whether it's the last 6-month chart, 2 months or 1 month chart, or even the last few sessions. Completely lackluster. Would you recommend anyone to buy DRL at these levels?
No, I think it is better to stay away from taking any trading or positional view in the stock because the stock is finding resistance at each highs. No doubt that it is forming higher top, higher bottom series also. But till the stock is not crossing 4600 or 4700 confidently, it is going to remain under pressure and it is underperforming to the broader basket. I think it is better to focus more on Cipla, where there is a clarity and the way the company is growing with a CAGR of 25-26%. I think certainly it's a buy on every dip and we are expecting stock to move towards 1300. We also like Sun Pharma and there also we are targeting some 1200. And in case if we see any specific buying interest from fund managers because of this recessionary talk, then I think after this insurance or IT, the interest will come in pharma companies also. So it's a defensive sector and certainly we should be buyer, but it is better to buy those companies which are really strong.
Right. Okay. You know, we've addressed so many stocks from the broader markets today, Srikanth, but I know you have 2 heavyweights in store for us that you'd like to recommend. So why don't you tell our viewers what these stocks are?
Yeah, I think, see, in this market, we are seeing range-bound activity, but the action is in BFSI and metal companies. So from the BFSI, we like HDFC Bank, which is around 1630, 1640. There we can keep stop loss at 1610. We are expecting stock to move towards 1670 or 75. So when the overall BFSI was down, the stock was not down. It was holding above the crucial level of 1600. So it's a buy at current levels. And we also like Tata Steel, which is currently trading around 118, 119. And the previous rally was completely outstanding, and it was again ahead of the expectation. So we are of the view that it is heading for the levels of 125. We can keep stop loss around 115.
Okay, so there you have it, Tata Steel and HDFC Bank, 2 stocks that Srikanth likes at these levels. With that, Srikanth, thank you so much for joining in and sharing your picks, your views and your insights on the market. And on that note, we're going to wrap it up right here on Morning Trade. Thank you for watching.